Welcome to Markets Now. I'm Michelle Rook with Kevin Duling of KD Investors, and we're seeing mixed trade in both grain and livestock futures this morning. Over in the grains, we started off sharply lower, especially in soybeans, but the corn market is actually coming back a little bit, Kevin. But soybeans obviously have been reacting to the election news and President Trump and possible tariffs, right?
Yeah, that's correct. It's interesting to see the price action today and overnight, and there's a lot of different ways we can look at this. With the strong tariff chatter, um, the dollar screaming higher by 2% this morning. Are we going to see a big push of exports? Between now and mid-January, trying to front run those tariffs just out of fear with the unknown, not knowing exactly, what those actual numbers are going to be. Do we see that happen? Or, with the wheat and corn balance sheet tight anyway, are we seeing just, bargain hunters, jump in with the break overnight and buy this back? So it's impressive to see corn start the day higher after being down hard last night. And then, on top of the election, we've got multiple other things coming this week. With the Fed tomorrow and the WASDA report on Friday. So
Yeah.
very busy week.
So do you think it's likely that as far as the China situation, that the market will handle this better than we did in 2018, just because we've been through this already? We've had a trade war with China.
I think that's a good way to look at it. We had the phase one trade deal, which took two and a half years to develop, and we came in a fairly weak ag economy at the time when so that was a very painful 2 years. Do we fall back on that similar framework without having to start over where the Trump administration goes and tries to find each a private deal with each country, individually, kind of like was set up before. And so I would hope that holds some weight and that can, and then, and keep us from getting too dark and scary here. But these markets love to trade fear and love to trade the unknown. So we'll see what the funds do with them in the short term. But
Yeah, no doubt. Yeah, and like you said, it'll be interesting to see if Trump goes back and renegotiates phase one, if they work on a phase two with China. But we get so fixated on China. At the same time, Mexico has been, looking like they're front loading some of their business as well. The president, former President Trump, has said that he may put tariffs on Mexico as well because of the border situation. And so that is something we need to keep an eye on too, don't you think?
yes, it is. And the question is Mexico, they've really been active the last month and a half. So did they buy all this with the idea that they knew there would be some issues with the border and the tariffs, or are they just buying it because of the low prices? And I think it's a little of both, really. And if you look at historically, Mexico is active in October, and so it wasn't that big a surprise to see these big purchases. So the question is, do those purchases dry up as we get into November, December, or do they continue with that pace, trying to front load it before January when we start getting some real action in that region? So, and that we just have to wait and see. So
Right. And you're talking about not just corn, but Mexico is a big wheat buyer too, aren't they?
yes, and I think they're our number one customer, I believe. But yeah, it's that's a market we've got to have, and it's one we should have, and I think we will. It's just maybe a little bit of pain in the negotiating process. So we'll see how this goes.
So what is your thought about money flow as well? The stock market shot up here today, but as you mentioned, the dollar index is sharply higher. You've got crude oil lower. Some of those things are not necessarily positive or friendly for the ag markets, correct?
That's correct. Yeah, everything's running against the ag markets right now, except for maybe cattle. The big question is tomorrow. What is the Fed going to do with this? I mean, you've got the stock market, at least for now, up 1,100 points. Are you gonna lower rates in front of that? And then with inflation being one of the major drivers of the election, lowering rates, are we going to stimulate more inflation? So there's some big pickles here, big economic pickles that we've got to work through. And I don't know what the Fed's going to do with this. I mean, it seems like most cases would argue that we need higher rates, which, would definitely, put the brakes on the stock market, in my opinion. So, it's we'll see what they do tomorrow. I'm kind of at a loss. I feel like we've been, I hate to use this phrase, but feel like we've been up a creek for a long time economically, and it's going to be very difficult to get us out of this gracefully. And if the dollar is going to take off, that's going to hurt. That's going to hurt everything that much more. So, very, very interesting times we're in. So.
Yeah, I'm with you. It'll be interesting to see what the Fed does, and I'm glad you brought that up because I was going to ask you about that. We also have the WASD coming up on Friday, so most of the average trade guesses don't show much of a change in terms of ending stocks. But do you anticipate we'll see a little bit of an adjustment downward in yield because of the dry conditions that we had towards the end of the season for both corn and soybeans? And what will USDA do with demand?
Well, demand's been extremely strong. The question is, what do they see going forward? So, but again, this WASD report was made prior to the election, so it shouldn't have any play into it. So, I would think overall the report's not going to be a big mover. We may see a slight decrease in yield. I think one is definitely argued here. Given some of the yield loss we did see at the end there, the last third of the crop certainly had some what you call shrinkage, I guess. I don't know what else you call it, just lack of moisture. So yeah, I would expect a small. I don't think they're going to make a big cut though. Overall, fairly benign report should be in the making here. So
right. Cattle market up a bit here this morning. Obviously, the stock market being higher, grains being lower, kind of at least initially kind of pushed that market. Do you think?
Oh, for sure. Yeah, I was actually pretty nervous about the stock market. Going in through this next couple of months, and so I've been talking to the cattle guys a little bit, saying, we've got some exposure here, so things are going our way today. We'll see if it can continue. Just the overall fundamental situation in cattle is fantastic and looks to remain fantastic. The heifers continue to stream into the feed yard, so no herd building yet. So it's going to take a pretty big economic sell-off to really hurt the cattle here. So
yeah. So you talk about how you've worked with producers on risk management on the cattle side. How should grain producers be positioning with all of this news that we talked about this morning?
Well, depending on the grain, with wheat and corn, they're going to. The U.S. is going to be the supplier because you've got enough shortages overseas that once we get into this third quarter of marketing for wheat, which starts in January, and the second quarter for corn, you're looking at countries are going to have to come to the U.S. to buy this, regardless what our dollar does, regardless what the tariffs are. So with that in case, cash seems to me like it's going to hold value, while the futures, who knows what the futures are going to do and what the funds are going to do with it. So if I'm needing money in this case, I'm actually entertaining the idea of like taking out the CCC loan and getting some income that way versus the old approach of just selling the cash and buying the calls and so it's just a positioning, not fully one way or the other, but using a little bit of a broad stroke on that, just trying to, because cash very well could hold better value in this thing as we go forward. Soybeans is different. You've got a much looser world stocks, and Brazil's looking okay. So I don't know. Brazil would be the one where I'd be tempted to sell if we needed cash, and then move into buy a wheat call, buy a corn call, something like that as reownership. So that's how I'm looking at positioning right now. So
some good advice as always. Thanks so much. Kevin Duling with KD Investors, and that is Markets Now.